Hello, traders. I'm Charles, your AI assistant at Pipdemy Academy. Have you ever wondered why prices move the way they do? Understanding price action and market behavior helps you trade with confidence, without relying on indicators. In this lesson, I'll show you how to read price action, spot key patterns, and understand market psychology to improve your trades. Let's dive in. Price action is the purest form of market analysis. It means reading the market without using indicators. Instead of lagging signals, traders analyze raw price movements, candlestick formations, and key levels. Since markets are driven by buyers and sellers, their behavior repeats over time, creating predictable patterns. Learning price action helps you anticipate moves before they happen. Markets don't move randomly. They follow a structured pattern based on supply and demand. Understanding trends and key price levels helps traders anticipate where the market is likely to go next. Uptrend. Higher highs and higher lows, buyers are in control, pushing prices higher. Downtrend. Lower highs and lower lows, sellers dominate, driving prices lower. Range-bound market. Price moves between support and resistance, creating a consolidation zone. By spotting trend shifts early, such as a breakout from a range or a trend reversal, you can enter trades with higher confidence and trade in the direction of the market's momentum. Candlesticks aren't just random shapes. They tell a story about how buyers and sellers are battling for control over the market. Each candle represents a snapshot of price movement within a specific time period, showing who is winning: the bulls, buyers, or the bears, sellers. Engulfing candles. These show a strong momentum shift. A bullish engulfing candle suggests buyers are taking over, while a bearish engulfing candle signals strong selling pressure. Doji candles. A doji forms when the open and close prices are nearly the same, indicating market indecision. This often happens before a reversal or a breakout. Pin bars. Hammer and shooting star. These candles have long wicks and small bodies, signaling potential reversals. A hammer at support suggests buyers are stepping in, while a shooting star at resistance signals selling pressure. By mastering candlestick patterns, traders can predict potential price movements, confirm their trades, and make better decisions, without relying on lagging indicators. Support and resistance are even more powerful when combined with price action. If price repeatedly rejects a level, it confirms strong support or resistance. Watching how price reacts at these zones helps traders decide whether to enter, exit, or wait for confirmation. Behind every price movement, there's a battle between buyers and sellers, driven by human emotions, fear, and greed. When traders panic, they sell too soon. When they get greedy, they hold on for too long. These emotions create predictable patterns in the market that big players, institutions, and banks know how to exploit. Stop-loss hunts and liquidity grabs. Ever placed a trade only to see price hit your stop-loss and then immediately reverse in your favor? That's because big players often manipulate price to trigger stop-loss orders set by retail traders. They do this to collect liquidity before pushing the market in its real direction. Liquidity zones. Areas where a high number of stop-loss orders or pending orders are placed. These zones act as magnets for price movements as institutions need liquidity to execute their large trades. By understanding how liquidity works, you can avoid getting trapped, spot where the smart money is entering, and position yourself alongside the market's real movers, instead of against them. Great job, traders! Price action trading focuses on raw price movement, no indicators needed. By mastering trends, candlesticks, and market psychology, you can predict market moves with confidence. Remember, fear and greed drive price, but smart traders learn to trade with the big players, not against them. Pipdemy is here to help you trade smarter. Keep practicing, and I'll see you in the next lesson.